It's Wall Street celebrating tax reform after betting big on it all year long. The Dow, Nasdaq, and S&P are all up more than 20%, with the S&P nearing the 30% mark. And my markets guest, Payne Capital Management President Ryan Payne, joins me now. Ryan, let's look back at the year that was. But it wasn't just all anticipation of this, what is now a tax reform that is done. It was a lot more going on in the U.S. and in the markets this year.
Yeah, absolutely. And I think the amazing thing is, if you think back to the beginning of the year, every analyst on Wall Street said single-digit returns. The market tends to confound everybody. And it did this year because the S&P up over 20%, the Dow up near 30%, and the Nasdaq just blowing every market away, close to 35%. It's just been a fantastic year for stocks.
But what was driving it, in your opinion, and what can those factors, those tailwinds, continue into 2018?
I think we've kind of had like a magical formula this year when it comes to the markets. You've had low inflation, you've had low unemployment, you've had global synchronized growth around the world, and market is a slave to earnings, and earnings just kept coming in better than expected quarter after quarter, and not just in the U.S., but globally.
But the valuations here in the United States, and by the way, like early in the week, you had not just the Dow, Nasdaq, and S&P closing at all-time highs. You had the Dow Transports at an all-time high, the Russell 2000 at an all-time high. And some people look at, just purely based on this corporate tax cut, that in the S&P 500, that flows right to earnings, and you could get an additional double-digit gain going into the new year. Do you see that much of a benefit for the markets?
I think there's a misconception out there that it has to do with taxes. Let's face it, the tax laws basically passed, and that didn't really have a huge effect on the market. I think everyone's been focusing on the wrong things. It's been about earnings, and I think it'll be about earnings again next year. So I think the optimism will definitely carry through. But if you're positioning your portfolio, you have to think globally.
Were you talking about specific markets? Because, again, if you bet on like some of the giant corporations here in the United States, you are betting on the globe, quite frankly. And that's one of the reasons that you've seen even the Dow do a mighty job of keeping up with the Nasdaq and the S&P 500 in 2017 in terms of overall performance.
It definitely have, and I think when you think about large cap tech specifically, but if you look at the emerging markets, for instance, they outperformed the U.S. markets this year, and I think that trend's going to carry forward as well, just because it's kind of like, remember, we've been in an 8-year bull market now in the U.S., so we're kind of in like the 7th or 8th inning, whereas things like the emerging markets, frontier markets, are more like in the 1st or 2nd inning. Valuations are a lot lower there. Growth rates are a lot higher. So when you're thinking about positioning your portfolio for 2018, you really have to start thinking about the rest of the world, because that's where the real deals are.
Well, would you underweight the U.S. and overweight some of these markets? And what kind of allocation are you talking about?
I don't think you want to go that aggressive. I would say most portfolios are probably underweighted in the foreign markets to begin with. The average portfolio I see is probably 70–80% large cap U.S. But even if you get to like a 40% or 50% weighting, I think that makes a lot of sense, especially when you think moving out the next 3, 4, 5 years. Just because, you're going to see a great global expansion. You want to participate in that. You just don't want to be U.S.-centric. What
do you think of the valuation story here in the United States? Are there any particular industries that you do think are wildly overvalued and that you would reduce your positions in going into 2018?
I mean, tech is getting frothy. We have the infamous FAMG, I can't if I pronounce it right, trade. We have Facebook, Amazon, right? You have Google, Microsoft, all those big blue chip companies. I mean, they're trading at pretty high multiples now. A lot of them had a 50% return last year. And I'm willing to bet if you look at your portfolio, you may own those stocks outright, but a lot of the funds you own probably own them as well. So it's probably getting overweighted.
So where would you allocate then? What looks undervalued? And I know my years of covering personal finance and markets and business and finance, you have to be careful because sometimes, again, they're cheap for a reason. But does anything look reasonably valued that you like here in the U.S., even industry-wise?
I really think right now the pipelines are a great place to put money. That's really just the infrastructure that carries oil and gas. Think about it like when you go on the highway and you pay a toll. It's the same thing with these pipeline infrastructure. They essentially make money on transporting oil and gas. And if you look at domestic demand, you look at global demand, the demand for oil and gas is going up, and they pay some pretty nice dividends. The Alarian Pipeline Index pays like close to 8% right now, whereas I'm getting less than 2% on the S&P. So I think that's a really good long-term buy right now.
And then finally, what about the outlook for commodities in the new year? Because if you have this synchronized global growth story, 45 of the developed countries all growing at the same time in 2017, the first time in a decade that's happened. What about commodities? As if a strong economy, a strong global economy means strong demand, generally speaking.
I'm with you. I'm very bullish on commodities. I think it needs to be a component in your portfolio. It's a great inflationary hedge because I do think you're going to see inflation kick in with all this global growth, and that should be more global demand for commodities as well. So I think I'm definitely bullish on commodities.
Ryan, great to see you. Happy New Year, my friend.
Happy New Year. Thanks for having me.
Thank you so much. Ryan Payne joining us.